Good evening, Demisola.
Good
Good
evening, sir.
evening.
Good evening, sir.
You can just refer me to, you can just call me Pelumi. There's no need for this, sir. So I think this is the first. Have have we done, like, have we met? Like, have you done an introduction before?
No, no, no.
Okay. So, okay, since you are the first person in this place, I'd, let me just start. Let me just do the introduction because I was not even meant to start the introduction today. Just
Ah,
meant to go straight
let's
to the
hold on
point.
for the rest now. You can't lecture just one individual.
I can lecture one individual. If the rest are, because we don't have time actually. This is
It's true.
7:15.
Let's give them 5 more minutes.
So before they come, can you like introduce yourself, like what you studied in school or where you are presently working, or if you are an undergraduate?
All right. I studied accounting in
Ah,
school, and I'm presently working at Land Construction.
oh, oh, that is nice.
Thank you.
Okay, so since you've introduced yourself, I should have even introduced myself first. My name is Benumi Fonlaja, and I'm a chartered accountant, and I work in United Bank of Africa as a credit analyst.
Oh, good to
Ah,
hear that.
thank you. So we have somebody else on this line. Okay, Josephine. Wait, we met Josephine. We've met already. Good evening, Josephine.
Good evening.
Nice to see you on the call. So without further ado, let's just start this class. I hope I am very audible enough for you guys to hear.
Yes.
Yes.
Okay, right. So I'll be sharing my screen now. Okay. So are you guys seeing my screen?
Yes.
Very good. So yesterday we went through the syllabus. We went through the syllabus yesterday. And for okay, give me solar. You might have to go through the syllabus yourself. I'm sorry about that. It's just that we just want to be fast about this thing because remember the exam is coming in November. That also reminds me, I forgot to send the title. So so that will start. So chapter one is the meaning of audit and assurance. And this is one this is one this is something about preparing for Ican exams or professional level exams. Once you see the topic like this, the meaning of audit and assurance, you will see the content still. Then when reading it, you see an introduction, then you see an exam content. A lot of people are fond of skipping all these parts. And if from this exam content that you will know what they want you to, they are expecting you to know at the end of each chapter. So if you can read what is here, it says this short chapter provides a bridge from the skills level audit and assurance module to the professional level paper. This chapter reminds the students of the core concepts underlying audit and assurance. At the end of this chapter, readers should be able to 1. Explain the basic concepts of assurance, audits, and levels of assurance. Then also describe examples of audit-related services, including reviews, agreed upon procedures, and compilations. A lot of people, it's like somebody's about to join. If you are right. So a lot of people, when they take their pack and they want to study their pack, they just skip all this exam content and go straight to the beginning. So if you are like that before, I'm just trying to like correct you on the proper way of studying Ican study packs. So that will start. The meaning of assurance. I'm going to look at the introduction, what assurance means, examples of non-audit assurance engagements, and elements of an assurance engagement. So the introduction. This study text is an advanced text on auditing and assurance services. It assumes that you've already studied the basics. Although some revision of basic topics is included, the main aims of this text are to build on the knowledge you gained from your studies of audit and assurance, and extend your basic awareness of professional codes and fundamental principles so that you develop a detailed understanding of rules of professional conduct. Introduce practice management. Extend the application of procedures involved in planning, conducting and reporting on audit assignments and non-audit assignments, and deal with group audits and audit-related services. Then provide a critical evaluation of procedures and reports, outline current issues and developments in assurance. So what is assurance? So according to what is here, in an assurance engagement, a practitioner is engaged by one party to give an opinion on a piece of information that has been prepared by another party. The opinion is an expression of assurance or comfort about the information that has been reviewed. So one thing about this and assurance is you try to relate it. You try what you study, you try to relate it with an example. It's an example. So like now I work. So like now I work in United Bank for Africa, and the auditors for United Bank for Africa are is EY. EY audits United Bank of Africa. So in an assurance engagement, so UBA will employ the services of EY to audit our firm. So UBA in this assurance engagement is the practitioner. Is engaged by one party. The party that the practitioner engages is UBA to give an opinion. Then they will give an opinion on our financial statements. That in this year 2025, the financial statements present a true and fair view. These financial statements are not affected by any form of bias. Then on a piece of information, the information is our financial information that has been prepared by UBA itself. So I hope you understand what we've been talking about since. So if you give an example, Solar, you work in a construction firm, right?
Yes.
So who are your present auditors? Are you aware of your auditors?
Baker Tilly.
Decal
Tilly.
Tilly. Okay. So your construction company, what's the name of your construction company again?
Elalan.
LL,
El Alan.
L and LAN.
Yes.
So you will say that in an assurance engagement, the carteli is engaged by L and LAN to give an opinion on a piece of information that has been prepared by L and LAN. Can you see? This definition is
Yes.
as easy as it. So this definition is as easy as it is. It's just for you to put it in your own words and try to relate it, rather than cramming these things up. So the opinion is an expression of assurance. An assurance that okay, you want to assure somebody that this financial statement will represent a true and fair view. A comfort. What comfort? What does comfort mean? To show somebody some form of care. Show somebody some form of care that oh, this thing is going the right way, or it's going the wrong way, as the case might be, about the information that has been revealed. So a statutory audit is one form of assurance engagement. The shareholders of the company do not accept without question that the information provided in the financial statements by the management of the company is sufficiently accurate and reliable. The statutory audit provides assurance about the quality of the information. This makes the financial statements more reliable for the user, as credibility is added to the statements by the expressed opinion of the auditor. Now, for every listed company in Nigeria, or for every big company, or for every registered company, they are expected to prepare audited financial statements. I think I'm right about that. Companies are expected to prepare, especially for listed companies, they are expected to prepare audit. They are expected to present audited financial statements, and they must they must do that by having a statutory audit. A statutory audit is like a compulsory or mandatory audit they are meant to have at the end of at the end of every financial year or financial period. Like the example of my own bank, UBA, our statutory audit is conducted by Ernest and Young. For other companies like that, they have their auditors. The auditors might not necessarily be the big four. It could be some medium-sized firms. It's just that UBA is a big firm, and they can employ the services of one of the big four. So that's what statutory audit is. So you say because of the amount of work carried out, a statutory audit provides a high level of assurance. So the level of assurance here is high, reasonable level of assurance. Other assurance engagements may provide a lower or limited level of assurance or comfort to the person receiving the opinion. The level of assurance given by other assurance engagements will depend on the various factors that are discussed that we are going to go through in various chapters. So you will see so in this course, in this subject, we'll be looking at both audits and we'll be looking at assurance engagement and non-assurance engagement, non-audit assurance engagement. So companies nowadays, due to the emerging regulations and the new things that are happening, companies nowadays are required to prepare other reports might not that might not be assurance, that are not like audit assurance engagements like normally. Normally, every company is meant to prepare the financial statement, the statement of profit or loss, the statement of financial position, the statement of cash flows, the statement of changes in equity, notes to the accounts, which other one again? Statement of profit or loss, statement of financial position, notes to the accounts. They are meant to present their audited financial statements. So there are other non-audit assurance, there are other statements that companies might have to present, depending on how big the company, and depending on how big the company is. So examples of non-audit assurance engagements might include reports on such matters as corporate social responsibility, environmental policy, employment policies, and non-financial performance indicators. So let me look at the people on this. I know some of you knows a thing or two about corporate social responsibility. I know for us that studied accounting or any accounting related course, we did courses like this, plus 407, business admin, all of something. So, so that I just don't want this class to be a class that I'll just be talking and you guys, it's not the, I want it to be an interactive class. So, Josephine, can you say one or two about corporate social responsibility?
It talks about, to my understanding, how a company, benefits its environment, in the area of creating employment opportunities and for manufacturing companies, disposing toxic gases properly and maintaining the environment and how they treat their employees and I feel like it just covers a whole lot about benefits to the society.
All right. Thank you so much, Josephine. That was very that was spot on. Environmental policies. Environmental policy can also deal with policies that deal with how a company dispose their waste materials to in the environment. Like there's some companies that deal with there's some manufacturing companies that produce toxic materials, like toxic waste materials, and disposing those toxic waste materials. There are environmental policies on them, employment policies too. It's only in Nigeria here that you see people working and there are no employment policies, and you see people working, overworking themselves, working Monday to Friday, not Saturday, Sunday, self, because of the oversight of labor laws in this country. So employment policies and non-financial performance indicators. There are financial performance indicators and non-financial performance indicators. Financial performance indicators are like your statement of your net, okay, your financial performance indicators for a company. Okay, let me even show it. Let me show it. Okay, let me give you an example then. I want all of you to contribute. Financial performance indicators can be your net profit after tax. What is a good financial performance indicator? You'll be having some of this, you'll be having to prepare some of these things when you do case study, you'll be preparing these financial statements. And you have to be giving reports on the profit after tax, profit before tax. So I've given an example of profit after tax as a financial performance indicator. So can anybody give an example of a financial performance indicator, FIARA, of a financial performance indicator that you used to look at a firm? FIARA Badmus, good evening. Can you give an example of a financial performance indicator?
Gross profit margin.
Gross profit margin, thank you. You'll be doing a lot of them. You'll be doing a lot of them when you do case study. Gross profit margin, net profit margin, return on capital employed, return on assets, uh, Jerry ratio, debt to equity ratio. You'll be doing a lot of those things when you do case study. So let's just move on. So non-financial performance indicators could be uh, let me even use an example. I work in a bank, and an example of a non-financial performance indicator would be customer ratings. So if for those, I don't work in a branch, but while I was doing my training school, I was training in a branch. And the ways they used to like part of the ways they used to evaluate a branch is through performance. I don't know if you have entered the bank. I don't know if I've entered UBA bank, any UBA branch, where you use the biometric POS machine. By the time you use the biometric POS machine, there's something that prompts up that says you should rate your service according to you will see poor, great. I don't know who has entered the bank and used some of I've used the biometric POS machine among any of you guys. Once we use okay, if you buy some, let's just say like Uber now, like Uber. By the time you use an Uber, by the time you use an Uber driver, like you employ the service, you book a ride on Uber. I think that's the English they use. You book a ride on Uber. You give your Uber person. By the time you are going to rate your Uber person, you rate him either five stars, 4 stars, 3 stars, 2 stars, 1 star. So you get those are examples of non-financial performance indicators. It could be customer, employee turnover, employee turnover, uh, to determine the amount of employees that are leaving the company. So let's say you are looking for a job now, and you look at a company's financial report. You are looking at a company's reports. You look at their non-financial, and you see their customer, their employee turnover. And you see that you have high level of employee turnover, like customers that are leaving the company, employees that are leaving the company. Like they employ 100 people, and at the end of the year, 50 of them are already leaving. Show that that kind of company has a toxic, might either have a very toxic, it might be a toxic place to work, or they are not paying well, or the work is too much for the kind of pay that they are giving. So those are examples of non-financial performance indicators. So assurance engagements have become more significant in recent years due to the increase in the range of information provided by company directors in reports to the shareholders and other stakeholders on the one hand, and resultant need for confidence in the extended information on the other. Auditors can provide assurance by giving an opinion about the information in these reports. So um, due to the increase in information that we prepare nowadays, there's need for assurance engagement, and there's no company that does not even like as a credit analyst. I work as a credit analyst, and one thing I can say is there are some credits that we even review that for the customer to collect that credit, we have to check customers' financial statements, audited financial statements, not just financial statements, to see if this customer is even eligible or we are comfortable giving this customer this loan. And sometimes we look at the financial statement, sometimes we see that miscellaneous expenses are very high. Why are miscellaneous expenses high? What is the reason for those miscellaneous expenses? Why is gross profits? These are things you'll be talking about in case study. Why is gross profit margin? Why is it that gross profit reduced from 2024, from 2025? Gross profit reduced by 50%. Net profits. Why did net profits reduce by 50% in 2025 from 2024? Is there why has cost of sales increased relative to revenue gotten from relative to revenue? Imagine if revenue is decreasing while cost of sales is increasing. What is happening? So let's just move on. So we have 5 elements of an assurance engagement. Please always take note that these elements of an assurance engagement, you must not forget these elements of an assurance engagement. They will most likely test it. They almost every diet you will see this question. It's a very popular question. Elements of an assurance engagement. So there are 5 elements of an assurance engagement. Number one is a three-party relationship, which also is to call tripartite relationship. From our business law, you understand what tripartite relationship is. A three-party relationship which consists of practitioner. So the example that we gave is L and is it L and T? I cannot remember. I cannot pronounce all these things that you give Minnesota. Let me just use my company. Practitioner, which is EY. Responsible party, that is United Bank for Africa. Then intended users. Okay, let me look at this thing very well. It's engaged by one party. And the responsible party is United Bank for Africa. The intended users are stakeholders. United Bank of Africa stakeholders. The stakeholders include the employees. Employees need financial statements to know if this company is making profits. It's from the profits that the company makes that they're going to pay employees their salaries. Tax officials need it. Tax officials need this uh, audited statement. It is from there that they will determine tax. The government too, they need all this information for their government policies and all. So the intended users they are very investors. An example is investors. If we are aware of the stock market, we can if we notice who knows the amount, who knows the value of UBA shares as at today or as at recent times? Who knows? Who has an idea among any of us here? Who can speak up and say they have. Hello, are we still here? Who knows an idea of how much a share in UBA costs this day today?
Please tell us.
Hmm? Okay, well, I should tell you.
Yes.
Okay, we don't. It's like 60 something. The only bank presently in Nigeria that has shares that is over the 100 naira per share is GT Bank. Followed closely by Stanbic. So I think Stanbic is 99, but that is if Stanbic has not entered 100 as of today. Because the last time I checked was like 2 weeks ago. So let us just continue what we are. Don't let us divert to the stock market. Then we have subject matter, which we are going to look at subject matter, suitable criteria, sufficient and appropriate evidence, the assurance reports. So there should be an explanation for this. And I think it's in one of these chapters. It's in one of these chapters. Mm. I'm sorry, I'm coming. There's a place where they explain this to me properly. So this is it. Oh, finally. Although we are still going to go through it. We're still going to go through it by the time we get to this chapter. But let us have an idea of elements of financial engagement before we get there. So as we're going, we have 5 elements of an assurance engagement. And the first one is a three-party relationship where we have the practitioner. So if you look at it, the practitioner is the accountant. The party responsible for the subject matter of the engagement, the intended user of the subject matter of the engagement. There will be a defined subject matter, suitable criteria for assessment, sufficient appropriate evidence, then audit opinion, which is the last one. So the first one is already understood. We've already understood the first one. Then the subject matter should be, what is the subject matter? So if EY comes to audit United Bank for Africa, the subject matter is audited financial statements for 2025 financial year. Hope you understand to this point. Hello guys, I need your response so that I know that we are following. Hope you understand to this point.
Yes.
Okay. So suitable criteria for assessments. So suitable criteria are the standards against which the subject matter of the assignment is assigned. This can be a difficult aspect of sub-assurance engagement assignments because establishing suitable criteria is relatively straightforward where regulations are involved, for example, the law or accounting standards. The process is more difficult in more subjective assurance engagement in areas such as customer care or labor relations. So suitable criteria is the standards against which this subject matter is assessed. So the standards, which are rules and regulations, the laws, the laws in that country, the comma. There's somebody that wants to join this. Trying to add somebody. Okay. So as we are saying, the suitable criteria Uh, so so those are the standards, like the laws and the accounting standards. The laws in Nigeria, we have the CAMA, Company and Allied Matters Act, CAMA 2020 as amended. We have BOFIA, BOFIA 2021, Banks and Other Financial Institution Act. What are the other laws that we have? SEC, Security and Exchange Commission Act. Then we have the standards, the accounting standards, the international accounting standards, the international financial reporting standards. We have the international financial reporting standards. Then for auditing, we have the international standards for auditing. We'll be going through a lot of those standards in this in the course of this study. So suitable criteria, that is the third element of an assurance engagement. So the fourth element is sufficient appropriate evidence. So we'll be moving there now. Sufficient, it should be around there. So I don't think there's a place where they actually explicitly stated give an explanation on sufficient appropriate evidence. They just scattered it throughout the pack. But they really talked about it throughout the pack, as you guys can see in the searches. But I can just explain it. So sufficient appropriate evidence, as you can, as it is as from that sufficient appropriate evidence, you can understand it as for an auditor, for an auditor is going to review the financial statements. He needs the financial statements at first. So if you employ an auditor, if like for example, my company, United Bank of Africa, we employ the services of UBA. When we employ the services of when we employ the services of EY will ask for appropriate evidences. They will ask for our financial statements. They will ask for our reports. They will ask for all our transactions that's needed to carry to carry the audits. Now, if we look at an example of a small and let's even give an example. Let me give a very relatable example. Let me give a very relatable example. Now, let's imagine a small and medium scale enterprise of just let's imagine like a restaurant, a fast a restaurant. Don't let me say a fast food restaurant. A restaurant like Amala Spots where they sell buffet. So as an auditor, what are the things you will ask? Let's just make this thing interactive. And let me ask uh Badmus Fiara rather. So if you are employed as an auditor, if you are employed as an auditor and you need evidence for you to start your audit assignment, what are the things you would ask for a restaurant, a small scale restaurant? What are the statements? What are the things you would ask? Tiara, are you on this call?
Yes, I am. Oh, am I the only person here?
No, there are other people here. Okay, Zainab, you want to speak up? You want to give us an example? Like, what are if you are employed by as an auditor, you are employed by a restaurant that sells amala, like just your local restaurant, what are the things you would ask them before you conduct your audit assignments?
That will serve as my audit evidence, right?
Yes, yes, appropriate evidence, yes. For you to
Okay.
for you to
The receipt and the payment, whatever they buy into the restaurant, how they record their daily transactions, some people that get food on.
thank you very much. Thank you very much. For a amala spot like that, you check if they give receipts, sha, you will check the receipts of all the you will check they'll probably have a payment book. There's some restaurants that have like a book where they record all the sales that they make. You will check the receipts and you will check the you check the receipts. You check their inventory. Inventory checks is part of auditing. Check their inventory, how much inventory they had at the beginning of the year and how much they have at the end of the year. You check their purchases of inventory. So many other things. You check their expenses for the year, their NEPA bill. It's part of your important things. Their NEPA bill for the year, how much they spent on electricity, and how much they sell cold drinks. Maybe they sell cold drinks. Used to how much they spent on fuel to power their because not if the electricity is not that stable, they might need to buy fuel. How much they spent on fuel, the receipts of all those fuel. That's why bank reconciliation statement is very important. Bank statements. You can check their bank statements because a lot of times some of these people don't have it in writing. And if they have it in writing, you will do a like you will do a check against the bank statements. Imagine you have a receipt for okay, you have a receipt. So imagine as the employer as an auditor now, then they give you a receipt that you bought these goods. On that receipt, you now see 80,000 naira. But when you now check the bank statement, you saw that the amount that was transferred was 60,000 naira. You can see that there is an overstatement. And you see that there's an overstatement of 20,000 naira. That means that apprentice has taken 20,000 naira for himself. It's a great concern, and that's what auditors do. They spot those differences. You check bank statement now. Check the bank statement. You can see that 60,000 naira was transferred, but you are on the receipt. You are seeing 80,000 naira. That is a very big. That is a key concern. So that's what audit does. Then the last part here is assurance reports. At the end of an assurance or at the end of an audit and assurance engagement, the auditor prepares an assurance report. And you will see the different kinds of assurance reports as we move on in this subject. You will see disclaimer, you will see qualified opinion, unqualified opinion. You'll be seeing those various types of auditor's opinion. So an assurance report is at the end of the year, the auditor now gives an assurance report that this financial statement, there is no form of material misstatement. This financial statement shows a true and fair view of what it purports to present. So that's what an assurance report entails. So that is the end of, okay. So we move to the meaning of audit and audit-related services. So we are moving to audit-related services. So we have ISA 200 here. ISA 200. So when you are studying all these international standards of auditing, you can have a separate part, like just say your notes where you jot and you study. Your notes that you jot, you can put it at the back of that notes. Then you write those standards there. ISA 200. So ISA 200 means ISA 200 is overall objectives of the independent auditor and the conduct of an audit in accordance with international standards of auditing. That is what ISA 200 is all about. So ISA 200 states that the purpose of an audit, which is a form of assurance engagement, is to enhance the degree of confidence of intended users in the financial statement. It is one thing for a company to present a financial statement. It is one thing for that financial statement to be true. That is the essence of audit. The essence of audit is now to say that these financial statements are true. They are not false. They are not biased. They truly say what they are saying. So, like my company now, like I gave you an example. Sometimes we get loan requests from customers because I'm a credit analyst, and sometimes we require them for the amounts that they request from us. Imagine a customer coming for 100 million naira. Sometimes it's not even sometimes we ask for their audited financial statement, not just any financial statement. Because it is from that audited financial statement we know if this customer is actually capable of repaying our loan. If anybody can just doctor any financial statement, and even the audited financial statements, we need to even know the auditors, if they are actually qualified auditors, not just one mushroom auditor somewhere. Just go and doctor audit reports. Because I've reviewed a request where the audited financial statements, everything there was just doctored. All the figures there were just manipulated. So this is achieved. Let's just continue. This is achieved by the auditor expressing an opinion on whether the financial statements of an entity are prepared. You see this thing, you see this statement that you are seeing here. You should be able to write it in the exam. there will be questions that will require you to write things like this. This, you see, this definition here is a very perfect definition. This is achieved by the auditor expressing an opinion on whether the financial statements of an entity are prepared in all material aspects in accordance with an applicable financial reporting framework. The financial reporting framework may be provided by, for example, by country-specific legislation. Like I said, our country-specific legislation is CAMA, BOFIA, plus international financial reporting standards. International financial reporting standards, our IAS 1, our IAS 2, our FRS 16, our IFRS. All those are our IFRS standards. The audit opinion typically makes reference to whether the financial statements give a true and fair view or present fairly the financial position and results of the reporting entity. Audits are long established formal processes, closely regulated by law and professional practice. Even after becoming a chartered accountant, for you to practice as an auditor, you have to work for an audit firm, like a proper audit firm, or the EYs, the Deloitte, the KPMG, the PwCs. You have to work for one of them. You have to work in the audit department. Then, then receive training. Then also get license to practice. I think you can get. I don't know. I can't really remember people that give license to practice for. I think it's FRC in Nigeria, Financial Reporting Council of Nigeria. And for those people that are in audit firms, they are the ones that after 5 years of practice, they become FCAs. It is people that are not in practice like me now that will wait for 10 years. That's if I don't join an audit firm in the future. I will wait for 10 years before we become FCAs. So, audit is a long established formal process. It's not just every big company. If you check the financial statements of Nestle PLC, financial statements of Nestle PLC, of Shell, of Chevron, you will see they were audited. It's a formalized process. It's not just something that you just call one audit or something and just it is regulated by law. It is a professional practice. And audits were developed because of the separation between the ownership of companies, that is by the shareholders, and stewardship by the directors. Like as we know, a limited liability companies, limited liability. The the owner's liability is limited to the amounts that they've contributed inside that business. So there's a separation between ownership and stewardship. So if I own a company like United Bank of Africa, Telu Elumelu and United Bank of Africa are not the same. Tony Elumelu is just a major shareholder. That's why it looks like the owner of UBA, but he's not the owner. UBA and Tony Elumelu are two separate entities. So if UBA goes into any court case, UBA will be the UBA will be sued, not Tony Elumelu. And if at the end of the day, UBA, God forbid, though, it will not even happen. Don't let me even use that example because that's where I work. But in the case of liquidation or bankruptcy, Tony Elumelu will only be limited. His liability will only be limited to how much shares that he has in that company and not to his personal assets. But that is by the way. So, in order to protect the shareholders from incorrect or misleading information by the directors, an audit is designed to provide a high level of assurance to the users of the financial statements. There's a company, I don't know if you guys are very conversant with fraud. I don't know if you did forensic and fraud or you studied about this forensic and fraud. There was a firm one time, WorldCom. I don't know who knows about WorldCom. They were classifying their assets or their expenses as assets. They were having a wrong classification, and they did it for years before the company run down. So I don't know who has gone through an example. Who can just talk about it? Like you've gone through an example of a company that winded down because of poor financial statement and poor auditing. They were not auditing their financial statements. Or so who has gone through an example, like who has seen an example, who can talk about it? I just want this thing to be a bit interactive. Or I will call names. So Josephine. Hello, Josephine. Have you seen an example of fraud in a major company? Or even any minor company or any company that we don't know? Josephine, I hope you are there.
No, I haven't.
You haven't. Okay. Let me ask. Gbemi Sola, what about you? Hello, Gbemi Sola. Are you on the call? Are you still on the call? Fiara, Fiara, can you say something? Hello, Fiara.
Hello, I'm here. Um, no, please, I don't have an example.
You don't have an example. Okay. Let me maybe I should quickly go. Let me quickly Google search on WorldCom and show you what happened with WorldCom. I just want to give a practical example. So I'll be sharing my screen on that one soon. So so I hope you guys can see my screen now.
Yes.
Hello, can you guys see my screen?
Yes,
So
we
if you
can
look
see.
at this World Cup scandal, it's a very popular scandal. World Cup scandal was a massive accounting fraud that shook the business world in 2002. The company was the second largest long distance telephone company, inflated its assets by nearly $11 billion, leading to its eventual bankruptcy. This fraudulent activity, driven by pressure to meet financial targets, resulted in significant losses for investors and prompted the passage of the Sarbanes-Oxley Act to improve corporate transparency. So you guys that are doing okay, I think it's a professional level. I think it's skills level. You guys, this corporate CSME, you have done all this corporate governance. Here's a more detailed look. Okay, the fraud. WorldCom, under the leadership of CEO Bernard Ebers, manipulated his accounting to hide billions in expenses and inflate its profits. So the cost to measure the pressure to maintain a high stock price and meet Wall Street expectations those executives to engage in fraudulent practices. So the whistleblowers exposed the fraud, leading to a public scandal and investigation. The consequences: WorldCom filed for bankruptcy, the largest in US history at the time. Ebers was convicted of fraud and sentenced to 25 years in prison Investors suffered massive losses. The Sarbanes-Oxley Act was passed to increase corporate accountability and transparency. WorldCom eventually emerged from bankruptcy and as MCI was later acquired by Verizon Communications. I want to go deeply in this and I want to tell you what they did. So, so you can see that it was KPMG that did the independence interview. Can you see? So, we can see Cooper questioned the accountants who made the prepaid capacity entries to obtain supporting documentation. Kenny Avery Anderson's former lead partner in WorldCom account before KPMG took over was unfamiliar with prepaid capacity and stated that no generally accepted accounting principles are allowed for capitalizing line costs. So this is where I'm going to. So they capitalized line costs. And we, from our knowledge of accounting, do you capitalize line costs? You don't capitalize line costs. And that was the issue here. So Anderson, I think Anderson were the one auditing them, did not test their WorldCom capital expenditures. Their audits did not cover this area. So Benny Vinson, the accounting director who made the entries, admitted she had processed them without understanding their purpose or seeing supporting documentation, acting on directors from Myers and General Accounting Director Buford Yates. Yates was also claimed unfamiliarity with prepaid capacity and stated that accountants under his supervision booked entries at Myers' direction. So I think this was the major thing too. In December 2000, WorldCom financial analyst Kim Emmett was told to allocate labor for capital projects in WorldCom's network systems division as capital expenditure rather than operating costs. Imagine. By Emmett's estimate, the order would have affected at least 35 million in capital spending. Believing that he was being asked to commit tax fraud, Emmett pressed his concerns up to change of command. Notifying an assistant to WorldCom chief operating officer within 24 hours was decided not to implement the directive. However, Emmett was reprimanded by his immediate superiors and subsequently lead of March 2001. Don't let me divert too much from what we have been doing because this is not what we are here for. But this thing that I'm saying, you can go and read more about it in your free time. But this is to show when a company, this you can see that this is why it is important for companies to audit their financial statements. When auditors come and review financial statements, these are the things that they review and they notice in a firm. And it was due to oversight that this firm eventually collapsed at the end of the day, and they had to file for bankruptcy. So we'll be going back to what we've been doing. We'll be going back to our chapter. So an audit opinion typically makes reference to whether the financial statements could be true or failure. Okay, we've done this. I think the error case is another one. No? I think the error case is another one. Okay, I know about that. I remember about that error case. I remember that error case too. But I think it's related to this one. No? I think it's related, but I'm not really sure. I'll check more about it too. So let's move forward. Since audits are so in order to protect shareholders from incorrect or misleading information by the directors, an audit is designed to provide a high level of assurance. If these financial state, if these financial statements are not audited, now imagine the number of people that will be misled. Let's imagine the investors. It is through this audited financial statement that investors will look at. Let me, I want to buy shares in this company. But you now see their audited, you see their financial statement, you see that they are making profits. They are making a lot of profits. Meanwhile, they are just overstating their profits. There's a lot of debts that they've covered, that they've hidden, a lot of debts that have been hidden. It is true auditing. Auditing is just like bringing it true and fair view, knowing that, okay, this is what is really happening in this company. So, audit related services. So, there are other audit related services that can be taken by an accountant or firm of accountants. And some of these audit related services include reviews of data, agreed upon procedures, and compilations. So, a review, a, a review provides a low or moderate level of assurance that an information under review is free of any material misstatement. The accountant's opinion is usually expressed in the form of a negative assurance, which is an opinion that there is nothing obviously wrong with the information. For example, the opinion might be, nothing has come to our attention to suggest that the information is materially misstated. The higher level of assurance provided by an audit enhances the credibility provided by the assurance process. However, an audit is more time consuming and therefore more costly than a review. An audit is a high level of assurance. High level of assurance. A review is a low level of assurance. That is the difference between the two. A audit will be more costly, takes more, has more processes. And an audit, the auditor's opinion, you will see, the auditor's opinion will be the information presented as we will see a good auditor's opinion for an audit. The decisions prepared have been prepared in accordance with applicable financial reporting statement standards, and they show a true and fair view. But you see this review, the opinion here is, look at the fundamental difference. Look at it. Nothing has come to our attention to suggest that the information is materially misstated. So the auditor is saying that nothing has come to his attention, that this information is misstated. He's not giving an opinion that this financial statement, they actually prepare, they present a true and fair view. He's just giving a low level of assurance that, okay, when you review this statement, you did not see anything bad there. So the next one is agreed upon procedures. Agreed upon procedures are adopted in an engagement where the party or client, hiring the accountant, specifically specifies the procedures that should be followed by the accountant performing the engagement. So an agreed upon procedure is the one that the person that employed the auditor tells him, this is what I want you to do. This is what I want you to do. It is not a high level of assurance engagement. It's not a high level of assurance engagement. It does not even provide any assurance, as the case I can look at it. The auditor, the accountant, is not providing any form of assurance. It's just following the procedures that the client has already provided. Come and do inventory check. Like an example is inventory check. Come and help me to count the number of inventory that is left Inventory check can be a good example of agreed upon procedure. Compilation, which is the last one here. With a compilation, the accountant is engaged to prepare information for the client, rather than audit or check the information prepared by someone else. For example, a firm of accountants may be asked by a client to prepare a tax petition. No assurance is provided in a compilation engagement. So in a compilation engagement too, there's no assurance to provided. It is just the client telling the accountant, come and help us to prepare our tax. Come and help us to prepare our tax. It's simple as that. So moving on, we have our chapter review. Before moving on to the next chapter, check that you know how to one, explain the basic concepts of assurance, audits, and levels of assurance. Describe the examples of audit related services, including reviews, agreed upon procedures, and confirmations. So we'll be going through these questions, and we'll be answering them. So how many of us are on this call? We have we are we are four on this call, so we have 5 questions. So the first question here is, which of the following is not an assurance engagement? 1. A, an audit of financial statements. B, a review of financial statements. C, an agreed upon procedures engagement. D, a report on the company's compliance with its environmental policies. So let me pick who will say this. Kiara, this question is going to you.
Is D.
So B.
D. A report on company's compliance with environmental policies.
You said D.
Yes.
You said D. Can you give an explanation why you said D? Kiara, can you give an explanation on why you picked D? At least there should be a reason why you picked D. Hello, Fiara. Are you still on this call? Okay.
Yeah, my network is
Oh,
lagging.
sorry. So why do you think the answer is D?
From the last part we just finished before going to chapter 3, I saw review agreed upon procedures, and the report was not part. So I don't know if you can hear me.
I can hear you, but I'm trying to understand what you just said now. You said a report was not part, but an agreed procedures was part. Maybe you should take a look at the question very well. It said, which of the following is not an assurance engagement? Like, which one of them does not give any level of assurance? Not even a high or a low level of assurance.
Okay. So I would choose D, a review of financial statements.
Okay.
Review.
All right. The answer is actually not B.
You're not required to express an opinion.
The answer is actually not B. But
Okay.
let me see who can bail her out. Please, who can bail her out among Zainab and Bimisola? Who can bail her out? The answer is not B. A review of financial statements. if you are reviewing a financial statement, you are giving a low level of assurance. We talked about this recently. Audit. Okay, don't let me talk too much. Let somebody bail her out. The answer to this question should not be, because a review of the financial statement gives a low level of assurance. So who can answer this question? Okay, Zainab, can you please bail her out? Zainab,
Sir,
please bail her out.
okay. An agreed upon procedures engagement.
So why do you think it's an so why is the reason for saying an agreed upon procedures? What's your reason?
Because the assurance engagement is talking about this thing, the confidence that the client's company wants from the auditor, and in the process the auditor is going to audit the financial statement, is going to review the financial statement, and is going to give reports.
Hmm. I like the way you said yes. I like the way you said yes. It's nice. It's nice. So the answer is actually C, Fiara. For an agreed upon procedures, like we initially talked about, is the client has already told the accountant that this is what you are going to do. He has already given him the procedures he's going to follow. So there is no assurance. There's no assurance. Also, in a compilation agreement, which we also did before we just got there, which was the last thing that we did before we started this one. Before we started this quiz questions, and agreed upon procedures. Even if you look at the English that he said, agreed upon. So it's more like, imagine the two of us, we agree on something that this is what we are going to do. I'm not giving an opinion. I'm unable to give an independent opinion. The essence of audit is an independent opinion, free from the owner of the financial statement, or the person that tells you to prepare the financial statements. It's just like, let me give an example. Let me give a very relatable example. Uh, if they call two people together now, they give them Pepsi and Coke. You might tell them that which one tastes better. We are giving them we are allowing them to have their own personal discretion on what they think is better. So that is what audit two is kind of like, giving your personal opinion. The auditor giving a personal and independent opinion that is that is that is free from bias, free from intimidation, free from familiarity, and we will do a lot of those things by the time we go to other by the time we start doing other chapters. You see what can even cause an auditor to lose independence, threats to auditors' independence. So the answer here is C, an agreed upon procedures engagement. So second question here is, an audit may never offer absolute assurance. Which one of the following statements does not support this statement? A, audit evidence is persuasive, not conclusive. B, an audit opinion is a matter of judgment. C, in a simple audit, it should be possible for the auditor to test all the transaction undertaking. D, there are inherent limitations in any accounting systems and internal control systems. So, uh, give me Sola. The, the floor is yours. So you'll be the one to answer number two.
Well, I'm not sure. I think it should be in a simple C, which is in a simple audit. It should be possible for the auditor to test all transactions undertaken, because in a simple audit, it should be possible. Sounds it sounds like being not certain, not sure not sure for the auditors to test all transactions or something. I think it's C. I'm not sure, but I think it's C.
Yeah, you're actually correct. That's how I say.
Praise God.
So let us read the question again. An audit, let us break down the question. We say the first part is an audit may never offer absolute assurance. There is no audit that can actually offer absolute assurance. It can only offer high level of assurance or low level of assurance. But an audit is expected to offer a high level of assurance, especially for a statutory audit. Then I said, which one of the following statements does not support this statement here? Audit evidence is persuasive, not conclusive. Meaning, audit evidence does not is not totally conclusive that this statement is absolute. Like there is no material error, there is nothing wrong with this statement. It's just a high level of assurance that okay, it's persuasive. You know, when you want to persuade somebody, it's just to persuade. It's just like a high level of assurance that okay, oh, this statement is not false. Also, the next one, an audit opinion is a matter of judgment. This one is very obvious. An audit opinion is a matter of judgment. The auditor is judging the financial statements. So this one is as easy as it is. Then this C, in a simple audit, it should be possible for the auditor to test all the transactions undertaken. So if we look at this thing very well, this is kind of tricky, sharp. In a simple audit, it should be possible to in a simple it's not possible for the auditor to test all the transactions undertaken. It's not possible. It's not possible. You can test, you can test, you can test maybe 99%, but you'll never be able to test 100%. I hope you understand that. Like that thing that I just said now. You can never test 100%. You can test like 99.999, but you will never be able to test 100%. I hope you understand that. I hope you are following. Like I need you guys' response.
Yes, sir. I wanted to say something before.
Okay, what do you want to say?
Yes, I was what I decoded that number, that option C as before was that that there are some there are some transactions that if they are bulk, since they use the term simple, that means it should be possible, like maybe logically. And if it is complex, if the audit is a complex audit, that means they can utilize those sampling techniques. So that's why I felt like this option C is talking more, is only negating that option. That means option C is supporting that audits may offer absolute assurance.
Hmm. Please, can you say it again? I want to understand it. I want to understand you better.
Okay, they say that like the simple audit, maybe
Hmm.
the audit process is auditing process that the process that the auditing surrounds is a simple one, and the transactions
Hmm.
involved, they are not many, they are just basic. So that means that's why they say that it should be possible, which is negating that statement that they said that an audit may never offer absolute assurance. In that case, because you know that they use the word may, but if it is for simple audit, that means it should be possible for the audits to offer to test all the transactions And if it is for a complex audit, that means it is not possible because they only use sampling techniques to test the relevant sample space. So that's, and option C is saying that audit may offer absolute assurance. That was the explanation I have in my mind. I don't know if it is correct or not.
Mm. I'm trying to understand what you are saying. I'm trying to understand what you are saying. I'm trying to understand what you are saying.
I don't know the other way I can explain it. Oh,
I think I think I understand what you are saying. I think I understand what you are saying. But I feel like even but I think I can see it in this way too. I think I can see it in this way too. Even if all transactions, if you test all transactions, like even if it is possible that all transactions are tested, there are other uncertainties. There are other uncertainties like the use of judgment. Because at the end of the day, an auditor is still going to use some personal judgment in reviewing the statements too. So this is actually it's actually a bit tricky, but it's something that's still understandable. So for Fiara and Bimisola, I hope we understand to this extent. This number two. Or you're still having hard time wrapping your.
Yes, sir.
You understand this? Are you sure?
Very sure.
Okay. All right. So the next one here is number three. What provides the highest level of assurance? We have limited assurance engagement. We have audits. We have review, and we have compilation. So, okay, Zainab, so you're going to answer this question. So, which one provides the highest level of assurance? Zainab.
yeah, I'm trying to analyze it.
Okay.
It's limited assurance. Okay.
Highest. So, are you sure?
Oh, is it the review?
The review provides the low. In this place, review provides the lowest level of assurance in these four options. Compilation provides no level of assurance. So it's between this limited assurance and audits. So which one do you think it is?
Uh,
Hmm?
mm, we go for limited assurance.
No. It can't be a limited assurance. An audit is a reasonable assurance engagement. We did it today. I don't know.
Yes,
I
there's no
could
reasonable interruption.
there's an audit is a reasonable. Limited assurance is
It's
limited.
moderate,
Or
but
moderate.
there's no reasonable in the option.
Mhm. There's audit. B is the answer.
B.
Audit. Yes.
Oh,
The highest level of assurance is an audit. It provides a reasonable or high level of assurance.
okay. I was looking for
When you,
reasonable in the. Okay.
A review, this review is a limited assurance engagement. This review that we are seeing here is a limited assurance engagement. It provides a low level of assurance, low to medium level of assurance. Then a compilation, that one offers no assurance. Like if we remember, a compilation engagement is just engagement to prepare tax returns. That one does not even provide any form of assurance. So Josephine, you are the next. So 4, a statutory audit is what form of engagement? A, agreed upon procedures. B, compilation. C, limited assurance. D, limited assurance. Reasonable assurance. Josephine.
I would say reasonable assurance.
There's no way you will not even say reasonable assurance because we've already said the answer for today. Thank you, though. Thank you, though, for the answer. So since your question was not all that, we've already said your question up. So it does answer number 5 too. So which of the following combinations describes I don't understand this question. Which of the following combinations describes our view? Okay, which of the following combination describes a review? I was just looking at it. Describes a review. A, reasonable assurance provided, positive opinion expressed. B, limited assurance provided, negative opinion expressed. C, no assurance provided, positive opinion expressed. D, no assurance provided, negative opinion expressed. So which one is the answer here?
Maybe it's B. Limited assurance provided, negative opinion expressed.
You are correct. The answer is B.
Okay.
The answer is B. So this is 8:46. This is 8:46. We still have 15 minutes to go. Okay, these are the answers here. We still have 15
Sir,
minutes
please,
to
I
go.
have a question.
Okay, say your question. I know you can speak. You can ask your
Okay.
question.
I thought reasonable assurance also give a positive is a positive form of review.
Reasonable assurance provided is a positive form of review. It's a positive form. It should be a positive. It's a positive form of review. Is that what you are?
Does that mean
Yeah.
correct?
Hmm? Sorry, what did you say?
I said, does that mean A and B is correct?
No, the question asks if which combination describes a review. Review. This question, this question here, this question here, they were meant to say a review. They went to write a view. We still talked about it. A review engagement. A review engagement. A review engagement.
Okay. Yes. I understand.
So
Yes.
you understand now. A review engagement provides a limited or a ass-
Yes.
assurance. So let's move on. So we should be able to do chapter 2. After chapter 2, I will send you the past questions for these 2 chapters. So, and I'll give you assignments to do something. Probably I will share you mine. I will tell you what to do at the end of the class. So, but let us just quickly dissect this chapter 2. So, chapter 2 is the regulatory environment. The regulatory environment. We are going to look at the need for regulation of audit and assurance engagement or services. 2, we'll look at professional standards. The professional standards. Then we look at corporate governance. Corporate governance is the way companies are being managed and controlled. Organizations are being managed and controlled. We look at money laundering. Hmm, Money laundering. Then we look at consideration of laws and regulations in an audit of financial statements. ISA 250. We've talked about ISA 220 already. So this is IS. So let us just move. Let us move on to the. I could have read this, but when you are doing it, please look at all these things. Okay, at the end of this chapter, readers should be able to explain the need for regulation of audit and assurance services, explain the process of appointment, resignation, and removal of auditors, describe the eligibility, rights, and duties of an auditor, describe the rule and structure of professional standards, including the standard setting process, summarize the key features of corporate governance in relation to audits, explain what money laundering is, and summarize the obligations and duties this places on the auditor. Then also apply ISA 250 to the audit of financial statements. So look at the need for regulation of audit and assurance services. So we are talking about public interest now. The key reason why audit and assurance services should be regulated is to serve the public interest. Assurance providers give an impartial professional view on issues that matter to users of financial and other information. It is important that this view can be trusted. So assurance, they say assurance providers will give an impartial. When they say something is impartial, there is no form of bias. We are not favoring party A over party B. We are not favoring party B over party C. Impartial professional view on issues that matter to users of financial or other information. Who are the users of financial statements? We have the shareholders, we have agents, we have governments, we have employees, we have investors, we have uh, we even have competitors. Competitors self are users of financial information. They use it to know how other companies are faring compared to their own company. So it is important that this view can be trusted. Therefore, assurance providers need to operate within ethical boundaries. These ethical boundaries, we talk about ISPA Professional Code of Ethics, professional competence and due care, integrity, confidentiality, objectivity, professional behavior. Then to consistent standards. Standards, as an accountant, standards should be like your best friend. All these IAS. Even me presently, self, I just bought this IFRS. Teach yourself IFRS. Yes, because when I was doing my professional note, I bought teach yourself corporate reporting, and I've already borrowed it out. So I had to buy this teach yourself IFRS also that I am updating myself every day. Because as an accountant, if you call yourself a chartered accountant, you should be able to relate with all these standards. You're able to understand some of these standards. At the end of the day, even after becoming chartered self, you still have to study. Still have to study these standards. So our profession is a profession that I know these standards they change. These standards change. There are new standards. Even IS1 now has been replaced. I don't know what it has been replaced with. Maybe it's IFRS 18 or something. So all the standards we need to update ourselves. So we are like lawyers that law always changes. Look at it now. There's a new tax law. There's a new tax law. Minimum tax. The threshold for the threshold for low income earners has increased. So and they've also the way tax is done now, people that earn more beyond that are earning like 1 million naira in a month will be paying more tax now. So there's a new tax, there's a new tax law outside. And you guys should also make yourself conversant with these new tax laws. So let's just move on. So From from your previous, so we'll continue from from your previous studies that assurance providers are regulated by the law of the land in which they operate. In Nigeria, we have the Company and Allied Matters Act. We have the BOFIA, Bank and Financial Institutions Act. We have all these acts, the CBN Act, the Security and Exchange Commission, all those our laws, the ethical standards of the land and the professional body to which they belong, Ican code of conduct for members. Then we have the professional standards adopted by their country, for example, international standards of auditing. So we'll first talk about the ethical regulation. The ethical regulation, assurance providers are given ethical guidance by professional bodies, for example, the Institute of Chartered Accountants of Nigeria. They are giving ethical guidance by law. They're also giving guidance by the International Federation of Accountants, IFA, which ICANN is a member of. You should already be familiar with most of this ethical guidance relevant to this syllabus from the ELAD audits. So, which is revised in chapter 3. So in chapter 3, we are still going to go and talk about it. So legal regulation. Most countries have legal requirements, and these legal requirements differ from country to country. The legal requirements in Nigeria is different from what is in Ghana. And Fiara is not on the call, she's the Ghanaian. I would have asked her what did they use in their own country. So in Nigeria, we use ICANN Act 1965, we use CAMA 2020, we use BOFIA 1991, Insurance Act 2003. So according to the CAMA, this is how auditors are appointed. So we are moving to a new dimension entirely now. So how are auditors appointed in Nigeria? And this is according to section 401 of CAMA. This is according to section 401 of CAMA. And it states that every company shall at each annual general meeting, everybody should know, at least as at this stage, everybody should know what annual general meeting. Every company shall at each AGM appoint an auditor or auditors to audit the financial statements of the company and to hold office from the conclusion of that annual general meeting until the conclusion of the next annual general meeting. So if they ask you in the exam, so I want to throw this question. If they ask you in the exam that, I know it's for those people that, although they won't ask you like that because this is professional level, nobody will ask you any simple question. But if they ask you as a professional accountant, that what is the duration of time? What is the duration of an auditor's? What is the duration of an auditor in a company? And they give you A, 12 months, B, 1 year, B, from the conclusion of the annual general meeting where he was appointed to the end of the next annual general, or to the conclusion of the next annual general meeting. So which one is the answer? And why is it that we don't pick 12 months and why we don't pick 1 year? Who can explain why? Do you guys understand the question? Why is it that, okay, let me just put it this way. The duration of an auditor is from the conclusion of the annual general meeting where he was appointed to the conclusion of the next annual general meeting. Why is that duration of an auditor? Why do we use that as the duration of auditor? Why don't we say 12 months? Why don't we say 1 year? Can somebody explain that to me? To us rather.
because it is during the annual general meeting, the shareholders may come to the resolution that they want to dismiss the auditor. So it is at the conclusion of that meeting that determines if the auditor that they've appointed will continue his tenure or not.
Okay, that's a very valid answer. So, moving on. So we'll continue now. At any annual general meeting, a retiring auditor, however appointed, shall be reappointed without any resolution being passed unless A is not qualified for reappointment, or a special resolution has been passed at that meeting appointing some other person instead of him, or providing expressly that he should not be reappointed, or he has given the company notice in writing of his unwillingness to be reappointed. Generally, in Nigeria, there are laws that requires like duration of years, and we will be going through it. That it depends on the type of audits. So there are some audits that is just 5 years. There are some that might be 10 years. That's and it's just for audits. We'll go to it. There will be a part in in the course of this lecture. You see rotation. There's something we call audit rotation. You know, if an auditor is auditing a company for so many years, there might be some kind of familiarity and so there's audit rotation in Nigeria. It might be rotating the members of the audit team or the audit firm entirely. But we will get there and we'll talk about it in detail. So if we continue what is said, provided that where notice is given of an intended resolution to appointed some person or persons in place of a retiring auditor, and by reason of the death, incapacity, or disqualification of that person, or all of those persons, as the case may be, the resolution cannot be proceeded with. The retiring auditor shall not be automatically reappointed. That's easy to understand. Where at any annual general meeting, no auditors are appointed or reappointed, the directors may appoint a person to fill the vacancy. The company shall, within 1 week of the power of the directors becoming exercisable, give notice of that fact to the commission. And if a company fails to give notice and required, the company and every officer of the company is in default and shall be guilty of an offense and liable to a penalty as the commission shall specify in its regulations. This is subject to as approved provided by CAMA 2020. The first auditors of a company may be appointed by the directors at any time before the company is entitled to commence business, and the auditors who are appointed shall hold office till the conclusion of the next annual general meeting, provided that the company may at a general meeting remove any such auditors and appoint in their place any other person who has been nominated for appointment by a member of the company and whose nomination notice have been given to the members of the company at least 14 days before the date of meeting. And if the directors fail to exercise their powers under this subsection, the company may in any general meeting convened for that purpose appoint the first auditors, and thereupon the said powers of the directors shall cease. The directors may fill any casual vacancy in the office of the auditor, but while any such vacancy continues, the surviving or continuing auditors, if any, may act. So this is the appointment. These are the procedures for the appointment of an auditor according to CAMA 2020. This is we cannot summarize them per se, and that is just the truth. There's no way we can summarize them. That's why we have to read them from top to bottom. So, but when you are studying, there's a way you can summarize some of them. But this is the raw version of it, and we have just dissected it now. It might look long and boring, but it's laws. Laws are always like that. So we're moving to remuneration of the auditor. In principle, the remuneration of auditor is set by whoever appoints him. In principle, the remuneration of an auditor is set by whoever appoints him. However, in practice, when the shareholders make the appointment, it is usual to delegate to the board of directors the power to set the auditor's remuneration. The directors are likely to be more familiar than the auditors with the nature and scope of work involved in the audit process, and so the appropriate level of fees for that work. The board of directors may delegate the task of recommending or approving the audit fee to the audit committee. Also, we are also going to talk about the audit committee in the course of this study. The audit committee, that's one extra committee set. They also have their own work, but the audit committee is not responsible for auditing the company. They are just like a separate independent committee. So when you are studying, just don't forget all these sections. Know that appointment of auditors in Nigeria is section 401. Removal of auditors in Nigeria is section 409. So, as seen above, in certain circumstances, the directors are empowered to appoint auditors. However, it could not be appropriate for the directors to have the power to remove the auditors from office. So, what this thing is saying is that directors have power to appoint auditors, but sometimes it's not appropriate for the directors to have power to remove auditors from office. For example, it would be inappropriate for the directors to have the power to remove the auditors because there may be a disagreement between the directors and the auditors about an item in the financial statement or about the conduct of the audit. The director could silence the auditors by dismissing them. Clearly, it would be more appropriate for the directors to recommend the appointment of new auditors to the shareholders and for the shareholders to decide. So what this thing is saying is that imagine I employ you as auditors now. You as an auditor, you now came and told me that now this is it. There are directors and there are owners. Owners and stakeholders, they might not be actively involved in the affairs of the company, but they are owners based on the fact that they have large share in the company. Now, the directors are people that are in charge of managing the company. Now, imagine if I didn't add this guy. So now imagine if the same directors that employ you now to come and give an independent review, you now you now found that in the financial statement there's some form of embezzlement of funds or something that was meant to be classified as an asset was classified as an expense. The directors, because they now know, they can now silence that auditor and say, hey, you went to do what you are not meant to do, Abi. We found out our our foul plays. The directors can easily just dismiss the shareholders. Directors can easily just dismiss the auditor, which threatens the independence of the auditor. I hope you understand what I'm saying. I need your response. I hope you guys understand what I'm saying. Do you guys understand what I'm saying? I need your feedback. Josephine, Zainab,
Yes. Yes, please.
do you understand? You understand that it is not appropriate for the directors who employ the auditors for them to be the ones to dismiss those auditors or remove those auditors. Can you see? It threatens the independence of the auditors. So they said it is only more appropriate for the directors to recommend. So the only things directors cannot remove auditors. The only thing directors can do is to recommend for the shareholders the appointment of new auditors. And for it is now left for the shareholders to now decide if they want new auditors. And if the auditors resign from office, they are required to give their reasons to the shareholders and notify the authorities of their removal. In Nigeria, it is the ordinary shareholders who are able to dismiss the auditor by passing an ordinary resolution with special notice at an annual general meeting. So, who are the ordinary shareholders? So, I want to ask, who are ordinary shareholders? Bibisola, Bibisola, who are ordinary shareholders? Bibisola, are you on this call? Who are ordinary shareholders? Zainab, are you on this call? Who are ordinary shareholders?
Yes, I'm on this call.
Okay, so who are ordinary shareholders? So Zainab, who are ordinary shareholders? I need your input. Who are ordinary shareholders? Who will bail us out? Zainab, can you give us a who are ordinary shareholders in the company?
Okay. I think they are the ones that they can cast vote in
Okay.
if they want to
Yeah.
appoint. They are
Yeah.
the ones that they have the authority to cast votes in the
So
company.
difference. So what is the difference between an ordinary shareholder and a preferred shareholder?
Okay. Another thing is that they also receive dividends. But their own dividend is lesser compared to preference shares. In terms of
It's
dividend, they prioritize preference shares holders before giving ordinary shareholders their dividends.
okay. You are very correct. So preferred shareholders will receive dividends before ordinary shareholders. Ordinary shareholders are the most common type of shareholders, and they allow them ordinary shareholders to have voting rights. Always have voting rights to vote at any annual general meeting. So, so in Nigeria, is these ordinary shareholders that are able to dismiss auditor by passing an ordinary resolution at an annual general meeting. So when this occurs, the company shall within 14 days give notice of that fact in the prescribed form to the commission. This commission is the Corporate Affairs Commission. And if the company fails to give the notice required, the company and every officer will be liable to pay a penalty as the commission shall specify in its regulations. So we'll move to resignation of auditors, and that will be the end for today. So resignation of auditors. We have resignation of auditors covers section 412 and section 413 of CAMA. So the auditor may choose to resign during his period of office, and the reasons for this might include: number one, a consistent lack of integrity is demonstrated by management and all those charged with governance. So as an auditor, because some of us will become auditors today, or some of us are even auditors presently. Okay, Josephine, you're asking about the time. The class is meant to end 9 p.m., but I will finish it soon. Once we are done with this recitation of auditors, that will be the end of this class. So the auditor, as an auditor, as a professional chartered accountant, I hope we know that only a professional chartered accountant can become an auditor. Only a professional chartered accountant can become an. So you say that's when the words, that's when you will hear this thing. All auditors are accountants, but not all accountants are auditors. So as a professional accountant, you get to a company and you see a lot of integrity. You see a lot of integrity issues in the company. There's lack of integrity. There's lack of lack of if you look, let's just look for those ones. You can borrow me those ones. Lack of integrity, lack of responsibility, lack of integrity, lack of responsibility, not lack of accountability. And there are so many red flags in this company. It is much more advisable for an auditor to resign. Another reason that may make an auditor to resign from an audit work is if significant fees remain unpaid. They are not being paid your audit fees. It can make an auditor to resign. So anyway, an audit firm can no longer maintain its independence following a corporate action. There might be threats to an auditor's independence. It can be familiarity threats, it can be intimidation threats. That thing can also make an auditor to resign. Then the client is no longer profitable for the audit firm. Before an auditor will even audit an audit firm, you know, it's only a profitable firm that can even be able to pay it's only a profitable company that will be capable of paying or engaging the services of an audit firm. So if a client or a company is no longer profitable, there is all it will make an auditor to resign. So, however, okay. However, company law provides certain safeguards to ensure that the shareholders are made aware of any relevant circumstances relating to the auditor's resignation. And the procedures now, we are now going to the procedures for resignation of current auditors. So number one procedure is the resignation should be made to the company at its registered office. So if we give an example of UBA, registered office is in Marina, Lagos Island, and it should be in writing. The company should submit this resignation letter to the appropriate regulatory authority. Two, the auditor should prepare a statement of the circumstances. This statement of circumstances sets out the circumstances leading to the resignation. If the auditor believes that these are relevant to the shareholders or creditors of the company, if no such circumstances exist, the auditor should make a statement to this effect. So the reason why this auditor resigned from this audit, the auditor should be able to say it too. The company should send this statement to the Corporate Affairs Commission. So if anywhere you see commission, that's where it is Corporate Affairs Commission. The company should be able to send this statement to the Corporate Affairs Commission within 14 days of receipt. All persons entitled to receive a copy in the company's financial statements, principally the shareholders, should, unless the court rules that the auditor is seeking to defend the company with the littlest possible publicity. So all other persons that are entitled to receive the company's financial statements, especially the shareholders, will also uh, get a statement of this auditor's estimation. Then the auditors may require the directors to call a meeting of the shareholders in order to discuss the circumstances of the auditor's estimation. And the last one is, if default is made in complying with the above provisions, the company and every officer of it who is in default shall be liable to a penalty as the commission shall specify in its regulations. So we move to the end of this class today. By next class, we'll be able to complete this chapter and probably move to the next chapter. So I'll be sending some past questions for you to work with. So thank you so much, everybody. Thank you for coming to this class. Thank you for taking out your time. So we meet next week on
Thank you so
Saturday.
much.
You're welcome. So have a lovely week ahead, everybody.
Thank you, sir.